This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices jumped on Thursday, with benchmark Brent rising to its highest in more than a week to more than $115 a barrel, after Iran attacked energy facilities across the Middle East following Israel's strike on its South Pars gas field, a major escalation in the war. Brent futures were up $6.08, or 5.7%, at $113.46 a barrel by 0814 GMT, after climbing almost $8 to the highest since March 9 to a session high of $115.10. U.S. West Texas Intermediate crude rose 57 cents, or 0.6%, to $96.89 a barrel, after earlier gaining almost $4 to trade at $100.02.
Iran is considering a proposal to levy transit fees on vessels passing through the Strait of Hormuz, a lawmaker said on Thursday, a potential bid to monetize Tehran's newfound grip over the critical waterway through which a fifth of global oil and liquefied gas passes. Since the start of the US-Israeli war on Iran, Tehran has disrupted maritime transit through the strait for vessels it says are linked to its war adversaries and their allies. According to the Iranian Students' News Agency, the lawmaker said Parliament was considering a bill under which countries using the strait for shipping, energy transit and food supplies would be required to pay tolls and taxes to Iran.
Moving on to the top news in the energy sector.
European Union leaders will attempt to find quick fixes to curb the jump in energy prices triggered by the Iran war when they meet for a summit on Thursday, but they have few easy options. Europe's heavy reliance on energy imports means the continent is heavily exposed to surging prices caused by the closure of the Strait of Hormuz, through which some 20% of global oil and liquefied natural gas supplies normally pass. European gas prices have increased by more than 60% since the US-Israeli war on Iran began on February 28.
British government bond prices fell sharply on Thursday as damage to energy infrastructure from the war in Iran sent gas prices spiking, wiping out a partial recovery for gilts seen in previous days. The yield on two-year gilts jumped by almost 18 basis points to hit a high of 4.282% at 0828 GMT, a level not seen since late March 2025, before falling back to around 4.23%. Five-year gilt yields also struck their highest since March 2025 at 4.393%, up 12 bits per second on the day, compared with a 5 BP rise for German bonds and a 4 BP increase for U.S. Treasuries. Next, we have the top news in metal markets. Britain will lower its tariff-free quota on imported steel and double the tariff on imports exceeding that quota, the government said on Thursday, launching a plan to protect its small but strategically and politically sensitive steel sector. Steelmakers have struggled to survive in the birthplace of the Industrial Revolution after decades of decline driven by long-term deindustrialization and, more recently, by high energy costs and a global glut of cheap steel. The government will cut the amount of steel that can be imported without incurring tariffs by 60%. Imports above that new level will face a 50% tariff, twice the previous rate of 25%. The changes will come into force on July 1.
Copper slid to its lowest point in 3 months on Thursday in a cross-complex sell-off of base metals, as oil prices spiked following Iranian attacks in the Middle East, stoking inflation fears and stronger dollar amid weakening rate cut expectation. The most active copper contract on the Shanghai Futures Exchange lost 4.50% to close at 94,430 yuan, $13,686.30, a metric ton, after declining as much as 5.09% to 93,850 yuan, the lowest since December 19 ND, the biggest percentage loss since February 2. And the benchmark 3-month copper on the London Metal Exchange slid 1.84% to $12,168 a ton, after dropping as much as 2.92% to $12,034, the lowest since December 24.
We will now look at the top news in the agricultural sector.
India, a leading importer of fertilizers, is in talks to increase purchases from Russia, Belarus and Morocco as Middle East tensions and China's export curbs risk tightening supplies ahead of the summer planting season, government and industry sources said. India, where farming is a mainstay, imports fertilizers such as urea, diammonium phosphate, DAP, and muriate of potash, as well as liquefied natural gas, a key feedstock for urea production. The Middle East accounts for roughly half of India's DAP and urea imports, with Saudi Arabia the largest DAP supplier and Oman the biggest urea supplier.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.